Wells Fargo banker Chenyue Mao under exit ban in China, what you need to know. Imagine the shock of being trapped in your birthplace, unable to return home, all because you're caught up in a murky criminal investigation. That's exactly what's happening to Chenyue Mao, a high-profile managing director at Wells Fargo, who's been blocked from leaving China amid growing tensions between the US and China. This case isn't just a personal ordeal, it's a stark reminder of how geopolitical strains can upend lives and businesses overnight, drawing everyone in to wonder what really lies beneath the surface. Chenyue Mao, a US citizen and key player in Wells Fargo's international operations, found herself grounded in China just weeks ago. According to China's foreign ministry, she's required to stick around and assist with an ongoing criminal probe. Spokesperson Guo Jiaquan explained that this move is fully in line with Chinese law, emphasizing that anyone, regardless of nationality, has to follow the rules when they're on Chinese soil. But here's where it gets controversial. The ministry isn't sharing any specifics about the case or Mao's exact role in it, leaving a cloud of uncertainty that fuels all kinds of theories. Wells Fargo, for its part, isn't saying much publicly. The bank has made it clear they're pulling out all the stops behind the scenes to get Mao back to the United States as quickly as possible. In fact, they've even halted all employee travel to China in response to this incident, a decision that underscores just how seriously they're taking the situation. This knee-jerk reaction highlights the broader risks companies face when operating in regions with strict regulations. Think of it as a company-wide pause button hit out of caution. To put Mao's story in context, she's not alone in this predicament. Exit bans like hers have become a tool used by Chinese authorities in a variety of scenarios, from civil disagreements to regulatory crackdowns or even criminal inquiries. For beginners, an exit ban is essentially a legal restriction that prevents someone from leaving the country until an issue is resolved. It's like being put on a no-fly list, but on a national scale. These bans can stem from anything as simple as a business dispute gone sour or as serious as allegations of wrongdoing, and they're often applied to both locals and foreigners alike. In Mao's case, it's tied to a criminal investigation, but without details, it's hard to pin down the exact trigger. And this is the part most people miss. Mao's professional life was on an upward trajectory just before this hit. Only 3 weeks earlier, she was in Rio de Janeiro, celebrating her new role as chair of FCI, an organization that helps streamline international trade through a process called factoring. Factoring might sound technical, but it's straightforward. It's when businesses sell their unpaid invoices to a bank or financial firm for immediate cash, rather than waiting for customers to pay up. For example, a company exporting goods to another country might use factoring to get quick funding for their operations, avoiding cash flow problems. Mao, with over a decade at Wells Fargo, specializes in this area, advising multinational clients on how to manage their working capital across borders. Her work with FCI, which boasts nearly 400 members worldwide, including 48 in China, shows just how interconnected global business can be and how quickly it can unravel. This incident isn't happening in a vacuum, it's unfolding against a backdrop of frayed U.S. China relations, where trade wars and diplomatic spats are the norm. Experts worry that cases like Mao's could make companies think twice about sending employees to China, especially those with Chinese heritage or dual nationalities. After all, if a respected executive like Mao can get caught in the crossfire, who else might be at risk? Two sources familiar with similar situations mentioned that local Chinese governments often issue these bans to handle everything from corporate squabbles to personal conflicts, and factoring deals can sometimes complicate matters due to strict capital controls. For instance, if there's a mix-up in how funds are transferred internationally, it could raise red flags. Adding to the intrigue, there have been other high-profile cases recently. Reports suggest a Chinese-American man working for the U.S. Commerce Department is also under an exit ban for not disclosing his government role during a trip to China. While we don't have all the facts on Mao's situation, it's clear that these tactics are raising eyebrows globally. Some argue they help maintain order and protect national interests, but others see them as overly aggressive moves that could deter foreign investment. As for Mao herself, she lives in a quiet, upscale suburb north of Atlanta, in a neighborhood with serene lakes and manicured lawns, hardly the setting you'd expect for such international drama. Her absence has left friends and colleagues in the dark, and Wells Fargo is treading carefully, seeking more information without making waves that could worsen things. But let's not gloss over the bigger picture. Exit bans like this one are becoming more common, and they're sparking debate about fairness and human rights. On one hand, they're a way for countries to ensure cooperation in investigations, but on the other, they can feel like leverage in larger geopolitical games. What do you think? Do these measures safeguard justice, or do they create an uneven playing field for international professionals? We'd love to hear your thoughts in the comments. Have you or someone you know faced similar issues, and how should companies navigate these risks? Banking alert: U.S. bankers banned from China, travel and hedge fund managers exposed. *** morning coffee. American bankers face travel bans for their own protection. *** An irate client identifies the only 2 hedge fund managers he respects. Some statements may seem straightforward, yet they can be deeply unsettling due to their context. For instance, when a spokesperson from the Chinese Foreign Ministry declares, for anyone in China, whether Chinese or foreign, they need to abide by Chinese law, it signals that something has gone terribly awry. In a recent incident, Chenyue Mao, a managing director at Wells Fargo's trade finance division, has found herself unable to leave China after her recent arrival. The specifics of her visit remain unclear, but her out-of-office reply indicates she is on a business trip, and she has recently been appointed chair of a trade association. This prestigious role may be linked to her current predicament, as Mao, although originally from China, has been based in Atlanta, and Wells Fargo has limited trade finance operations in mainland China. In light of these developments, Wells Fargo has understandably decided to halt all travel to China until they can ascertain the situation and hopefully resolve it. Such travel restrictions can occur from time to time. They do not necessarily indicate any wrongdoing by individuals or companies and are often related to civil litigation or business disputes. Unfortunately, holding a leadership position in a trade association may expose one to the kinds of disputes that can lead to such restrictions. Regardless of the reasons behind this situation, it is undoubtedly distressing for her family and colleagues, serving as a stark reminder that a career in banking can sometimes be perilous. As globalization diminishes and authoritarian tendencies emerge in various countries' border control and immigration policies, many senior bankers may start to reconsider the advantages of virtual meetings and video calls. In another realm, those who pay fees to hedge fund managers often harbor resentment, though not typically expressed as harshly as in this case. Jagdeep Singh Barkar, the chief investment officer of the University of California Pension Fund, has recently articulated his decision to eliminate the fund's allocation to alternative investments, describing the past 20 years as a wasted endeavor. He believes he could have avoided all the drama, illiquidity, and exorbitant fees simply by investing in public equities. The modern hedge fund industry has faced its share of criticism, including lengthy lockup periods and pass-through fee structures associated with contemporary multi-strategy funds, as well as the extravagant lifestyles of fund managers, characterized by art collections, private jets, and luxurious homes. Barkar specifically points out that the initial rationale for investing in hedge funds was to safeguard against significant market downturns. However, during the crises of 1999, 2008, and 2020, he argues, hedge funds didn't hedge us, they exposed us to the opposite kind of risk, which ultimately harmed us. These criticisms of hedge funds are well known, yet they have not deterred other pension funds from increasingly investing in this sector. Interestingly, even Barkar concedes that some fund managers justify their fees. He highlights Bill Ackman of Pershing Square and Sir Chris Hohn of TCI as phenomenal investors who have consistently made sound decisions. Should he choose to re-enter the hedge fund arena, he might find a more favorable reception from these two funds than from those with whom he has severed ties. Meanwhile, in a curious turn of events, a tech entrepreneur shares his experience of attempting to raise $150 million in debt without the assistance of a banker, and the insights he gained from this endeavor. Surprisingly, the takeaway was not a realization of the value of bankers. Instead, it inspired him to develop an AI-native deal room to connect companies with private credit markets. There are numerous motivations for pursuing a career in private credit, one of the most compelling being the fact that some individuals are permanently barred from trading in public markets. David Sharp, the former CEO of Bridging Finance, aspires to return to public markets and is currently seeking to have his lifetime trading ban overturned by Canadian regulators. Hao Zhong, known as the godfather of Two Sigma's techniques team and a former roommate of Citadel Securities CEO Peng Zhao, departed Two Sigma amid last year's upheaval. He now appears to be launching his own quantitative fund. In what may be the most significant KYC check in banking history, hackers associated with North Korea successfully transferred over $20 million from the Central Bank of Bangladesh in 2016. Recently, officials at a Sri Lankan correspondent bank were recognized for their vigilance in identifying the irregularities, raising the alarm, and ultimately saving a substantial portion of the funds. When forecasting industry trends, it's essential to remember that projections and targets are subjective opinions, while personnel and real estate are concrete facts. Currently, hedge funds are actively hiring agents to lease an unprecedented amount of office space in London, suggesting a promising outlook in that regard. Who is the most criticized employer in Canary Wharf? According to cleaning unions, it is EY, whose contractor plans to lay off 37% of the cleaning staff, prompting protests outside their office this week. From what we can gather, decisions were primarily based on titles and superficial optics rather than a nuanced understanding of roles, skills, or actual overlaps in responsibilities. It appears that Amazon's AWS manages workforce reductions in a manner strikingly similar to that of large banks. It may seem peculiar to eliminate your geopolitical risk identification and management team at this juncture. Nevertheless, HSBC is cutting 10 positions in this area globally, seemingly to reduce redundancies. Perhaps this is also due to the fact that the risks have become more overt and easier to identify. If you have a confidential story, tip, or comment to share, please reach out at +44 7537 182250, SMS, WhatsApp, or voicemail. You can also contact me via Telegram at @SarahButcher or Signal at SarahButcher.22. Alternatively, you can fill out our anonymous form or email editor tips at efinancialcareers.com. Signal is also available for communication. Please be patient if you leave a comment at the bottom of this article. All comments are moderated by real people. Sometimes, these moderators may be unavailable, so it might take a while for your comment to appear. Rest assured, it will eventually be published unless it is deemed offensive or defamatory, in which case it will not be posted.